Welcome to Web3 101, the podcast where Republic's blockchain experts will guide you through the new digital frontier, demystifying the complex world of digital assets and decentralized technology. Join us for a series of insightful, educational Q&A conversations that decode core crypto concepts using language and explanations that everyone can understand. At least we hope so. From security token offerings to the inner workings of blockchain infrastructure, decentralized finance, also known as DeFi, and beyond, Republic has got you covered with Web3 101. Not only will Web3 101 help you better understand the crypto landscape, but it will prepare you to confidently participate in the next era of the internet. Welcome to episode 1. Ladies and gentlemen, this is the very first episode of Web3 101, your passport to the world of digital finance and blockchain, brought to you by Republic. I'm your host, Graham Friedman, and I'm thrilled to be your guide on this exciting journey. I operate here at Republic, where I've worked for the past 4.5 years with my very wonderful team as the head of venture. And I have the privilege of discussing crypto and blockchain tech with a variety of founders. We've been working very much internally to distill that and bring it to you. Today, we're deep diving into the intriguing universe of security token offerings, or colloquially known as STOs. You've probably heard the buzz, but what exactly are they? How can they reshape traditional finance? Well, that's what we're here to explore. And I'm not alone on this venture. We've got two incredible experts on board. So grab your notepads and get ready to learn from the best. Joining us today is Matt Melbourne, Republic's head of token offerings, and Maya Alloy, Republic's crypto engagement manager, both of whom are brimming with insights into the digital asset landscape and who have been at the forefront of security token for years. There's literally no one I trust more to cover this topic. So stay tuned, because by the end of this episode, you'll not only understand STOs inside of out, but you'll also have a clearer map on the road ahead for the Web3 revolution. So I'd like to provide a moment for each of our hosts to give a quick intro. We'll start with Matt. So without further ado, Matt, please take it away.
I'm Matt. I head up token offerings at Republic. After more than $2.6 billion raised across 2,000 companies and projects, across 3 million users, we're ready to take the next step of tokenizing every offering on our platform and building the future of finance in a tokenized way.
Excellent, Matt. And thanks for joining us. Maya, on to you.
Thanks, Graham. Hey, everyone. I'm Maya. I am an engagement manager and advisor at Republic Crypto. I'm super excited to be talking about security tokens today. Security tokens was my first passion in blockchain, so I'm super excited to dive into. At Republic, my passion lies into supporting crypto projects with strategies, growth, and fundraising for our clients. So, yeah. Thanks so much for having me.
Great. So we're all here to learn about the core concept of security tokens, the offerings around them. But I think, the core question is going to be, what are they? So Matt, would you mind chiming in just to run us through security tokens and STOs themselves, the offerings?
Definitely. And I think the best way to think about it is if you look at the private markets as a whole, you have all different assets that are sold in a bunch of different ways to different types of investors. So you can have private stock in a venture-backed startup or some sort of upside interest in a real estate venture. You can even own nowadays equity in a piece of art. Tokenizing something typically means taking that asset and taking that investment contract and bringing it on the blockchain to better help with ease of transacting, reducing transaction costs, and generally making the process for investing, buying, and selling these assets easier and more efficient.
I've got one additional question just to tack on to that, but just because the security enters blockchain in tokenized form, does that make the security any different, or is it pretty much standard to what they have been traditionally?
What we're finding as an industry is, of course, anything that happens on chain, especially if it is an investment contract or a security, it still needs to comply with securities laws and other laws that are relevant to securities laws, like money transmission, money services businesses, KYC, AML, and other OFAC and bank secrecy laws. So the transactions and the offerings themselves are still needing to comply with all of these laws. But ideally, blockchain and tokenization makes the transaction more efficient and cheaper.
That's really cool. So my next question, I'm going to target it to you, Maya, because I know that your background, even before Republic, was in the offering of these products, right? So my question to you is, we have STOs, security token offerings. We have ICOs, the big thing from 2017, the initial coin offering. Then we have IPOs, initial public offering, I think, which people are probably most familiar with. How is an STO different from the ICO and the IPO?
That's a good question. So IPO is easier to understand because I feel like everyone has heard already the term before. It stands for initial public offering. So basically is when a company go public and sell part of their shares into the stock exchange. So it's a very expensive process. Companies usually have to go through an investment bank and go through all sorts of regulatory scrutiny and auditing to actually be able to share those assets to the public. So, and usually these are for companies that are more mature and later stage into the whole process of investment and raising capital. On the other hand, ICOs started around 2018, 2017, because crypto projects saw an opportunity for utilize blockchain to sell cryptocurrencies and raise capital to their projects that are really early stage. So as you probably have heard, that did not go well with the SEC, and many of those companies were scams, fraud. So that led us to finally STOs, which are regulated ICOs. Basically, security tokens come from the term security, is an investment asset, is backed by real world assets such as equity, bonds, any revenue sharing agreement, and utilize blockchain as the underlying technology to power the transactions and make it everything faster, more cost efficient, and cheaper. So these are the main three differences between those three assets because they're very different in terms of application, but also in terms of end result.
So just a question that I think is at the core of this. You have STOs, you have ICOs, right? The coins, as you said, that were sort of like, I mean, there were scams, a lot of them, but also very utility based, like really towards computer networks rather than like company equity. Would you mind just diving into like just a real quick differentiator between what was the asset that was really issued in the ICO era versus what kind of asset is being issued in the STO?
That's a great question because there's nothing intrinsically bad into ICOs. They just mean that they represent monetary value or a transactional value inside an ecosystem that is on a blockchain. So ICOs are not intrinsically bad. They're bad if they're not any utility underlying that asset. So securities tokens, they're securities because they are under scrutiny of the SEC and they represent investment in a company or an asset. ICOs are very different. They're not supposed to be backed by any sort of investment in that specific company. Their main utility is access to that ecosystem, which means that an ICO needs to have a clear utility and a clear path to at least a decentralization or a path of not exclusively investment or ownership in the company, but actually just participation in that ecosystem.
Got it. So it's kind of like using the Microsoft Windows operating system versus owning Microsoft shares.
Exactly. That's the perfect example. So I love the comparison with Disney stocks and Disney dollars. So when you are thinking about security tokens, you're thinking about almost like Disney stocks. So when you buy Disney stock, you're not expecting anything else than a financial upside on that asset. So you buy Disney stock, you hold it, you just expect that the company goes well and you make some money out of it. And it's a completely asset that is under scrutiny of the SEC, and it's the regulatory and the compliance involved that asset. It means that it's an investment. With the ICO, it's almost like it is a Disney dollars. If you go to Disney and you exchange your US dollars to Disney dollars, you go and utilize that currency inside Disney, but it doesn't mean that it will increase the value. It just means that it's an access to that specifically ecosystem.
Great. Let me pop back to Matt quickly then. So obviously this is a new model. It comes with, some uncertainties, or maybe it's not as tried and true, right, as tested as previously. So why, in your words, do you think a company would choose to do an STO over a more traditional fundraising method?
I think a lot of the benefits of a tokenized offering versus a non-tokenized offering are actually for the investor, and then in an indirect way beneficial to the company or the issuer. And I say that because the biggest benefit I think of tokenization is increased liquidity, efficiency and speed of a transaction, and decreased transaction costs, all of which affect the investor most acutely. And the issuer or the company that's either raising money to sell equity or sell some sort of debt instrument, for them, they hopefully can raise more money by the actual investment being more attractive to an investor in a tokenized form than in a non-tokenized form. So I think that's how the company benefits most. So is in that like primary issuance or that primary offering. In an ideal world, they'll raise more money because this instrument, this investment is more attractive to investors for those reasons.
One of the main reasons why companies sometimes it takes so long to go public is the costs involved into the transaction fees. So when you look at NASDAQ, for example, they spend almost 2/3 on the revenue in administration costs. And that's insanely crazy. When you think about transparency that blockchain offers to companies and to maybe issuing those underlying assets via blockchain, it makes things way cheaper and faster to transact, and a way better way for investors to even access those markets.
That's really interesting. So just, coming from my place of understanding the blockchain and how it connects token holders, like it is literally a tree of connections of asset holders, right? And you talk about the investors getting these benefits. Do you see any novel new like engagement practices, marketing capabilities, just like new functionality in general that can be unlocked from having these security tokens on chain?
It's true. And a lot of the companies that have historically come to Republic and raised money with us, they've gone and raised money from VCs and other institutional firms first. And then they carve out a piece of their round, their seed round, their Series A, their Series B, and they open that up to their community as sort of a marketing and engagement, a community engagement sort of campaign. And I think you're right that tokenization is sort of the next iteration of that, where it will enable even greater and more dynamic engagement via the tokenized structure that the issuer, that the companies raising money get to use to engage those community members and investors. Practical examples of that would be if you take a security or an investment that is tokenized, they have that tokenized equity upside interest in a company, but then that token can also sort of gate access to this special community of investors, such that if you have a token, it's your access point or your passport to get access to special events or privileges that only that investor community has access to. And it's a way to do that in sort of a cost-effective and tech-forward, personalized way.
So I think the interesting takeaway that I'm getting, and let me know if this is correct, is that in the world of shares, you have investors. And then there's a company and they have their community. And currently they are just not attached, but through this mechanism, the investor and the community can really become one and the same. Is that accurate?
Yeah, I think investors get the value of owning an equity or some other upside in a company or a project. And then the company or the project gets to benefit from that increased level of engagement where they're actually sharing upside with their community versus just a one-way transaction where, typically if it's a company that's selling a product, the community is just purchasing that product or participating in that ecosystem in that really limited way. I think there's a real benefit for companies for their own growth and revenue to actually engage more deeply with that community with these sorts of mechanisms.
I would also add that one of the benefits of security tokens and participating in an offering so early is the opportunity that investors have to have some sort of participation in the decision making on the future of the company. Very different than if you're buying a stock when a company that is already too mature for you to actually try to make any decision and try to influence that company somehow.
Great. So, Matt, I wanted to ask you, what kind of regulatory framework exists around the STO, and especially when you compare it to ICOs? Because right now, the regulators and crypto are all over the news. So I think we're all very curious to kind of understand the difference, again, around that framework and how these operate.
So everybody knows that you can buy a stock on the Robinhood app, and you can own equity in companies like Facebook or Uber. But what a lot of people don't really understand is that there's a tremendous amount of value created before a company actually IPOs on a stock exchange, and your everyday average investor can buy that stock. And tokenization, I think, in those private markets, those pre-IPO markets, probably can have the biggest impact, because those markets are so illiquid and inaccessible. We're innovating at Republic to make them more liquid and more accessible. And tokenization, I think, is the next stage of that. And so the laws that govern those rules are called securities laws. And they were created after the Great Depression in the US almost 100 years ago now. And a lot of those rules still govern the way that regular everyday people can invest in companies today. So securities laws are the big one. They also intersect pretty heavily with money services business rules regulated by FinCEN, also on a state-by-state level as well as a federal level, as well as trust and custody rules about owning securities and the way banks and trust companies are regulated, and then also general KYC, AML, OFAC type rules where companies have to understand who they're transacting with when there's money transmission involved. So I think those are the set of rules that we're looking at and that we operate within.
Very interesting. So just to really keep it super simple, I mean, are STOs considered safer or more compliant than ICOs?
I think it's interesting. So, for example, at Republic, we try to stay away from the acronym ICO. Just because there's such a negative connotation with it. But for example, we do the equivalent of an ICO, but through a securities framework. So I wouldn't say one is necessarily safer. They're just two totally different asset types. So an ICO, to both of your earlier points, is the sort of asset that the investor is looking to purchase is the token itself. Whereas with a security token offering, there's typically an underlying asset or investment that the token represents or sort of is the record of. So it's just two totally different assets. I wouldn't say that one is safer or less safe than the other. But in both cases at Republic, we sell them as if they're securities, whether or not the underlying token is a security or not.
All right, all very educational. I think there's a good amount to download there. But I want to move on to kind of the risks and the challenges around doing these issuances. Obviously, a lot of our listeners are probably on the founder side just as much as on the user purchaser side. And that's a really fascinating part of what we do at Republic, which is that our community encompasses everybody. So just to discuss, I'm a founder, I'm launching a business. I don't really see the public markets as a solution. And I'm thinking about this whole STO kind of thing. And Matt, I'm going to target this to you still. What are the potential risks associated with investing in STOs? What are the risks around the issuer side? And what are the risks around the investor side?
So if you're a company trying to raise money and you're interested or at least curious about whether you want to do that in a tokenized way, one of the things that we caution companies about and that we're really cognizant of is if that company doesn't have a Web3 or crypto knowledgeable community, we don't want the tokenized experience to turn those people off to investing in this asset that they otherwise would be interested in. So I think that's one risk that founders have to be careful of, whether you're using Republic or a different platform to do that, is the experience tailored to an audience that is crypto native or Web3 native, or does the user experience sort of accommodate folks who are much less knowledgeable about crypto or Web3 or tokens? At Republic, we're trying to build our product towards the latter, so that any company, whether you're a sports team or just a venture-backed startup, a CPG company, some real estate venture that has a community element, if you're going out to raise from your community and they don't have knowledge about crypto, they still can use Republic and invest in tokenized assets and see the benefits of tokenized assets without perhaps having this sort of like deep or full understanding of blockchain or tokens.
I think that's a really strong touch point. I would just love to dive in quickly to say, or to ask you, what has Republic done to make it so that if I'm investing in a security token, I don't have to be like a crypto bro? Because that does sound like a major barrier as an investor side.
That's a really important risk to your first question for investors, which is you have to do your diligence on the asset and, the sort of the platform that's delivering you the asset, because crypto and blockchain, there's a lot of opportunity to get scammed or to not basically be able to realize the benefits of that underlying asset because you're not able to use your wallet or there's actually no connection or endpoint for you to exit that position. So it's really important to understand like sort of the ecosystem that you're buying into and how it's connected to a broader market or marketplace. At Republic, what we've done is we created the Republic Wallet, which we think is a best-in-class security token wallet that can hold security tokens and digital assets in a future state, will allow you to purchase those assets as well as trade and sell them in a marketplace via our partnerships and partners like INX, which are secondary marketplace for security tokens. So we've built a native web app that is extremely easy to use, even for those who aren't crypto native or don't have a ton of experience in the crypto or Web3 space.
Interesting. And I'm going to toss this question to Maya, sort of the same topic, but obviously there's a lot of stories in the crypto landscape of people losing access to their wallets or clicking on a link and, oh my God, my net worth has all disappeared. What are the expectations on just like the user side around these securities? If I participate and I invest, $100, am I going to lose that $100 if I click on the wrong link?
That's a great question because I think that's probably, if you haven't been in crypto, haven't used a crypto wallet yet, you don't know yet how dangerous it is to lose your seed phrase and lose all your assets in the blink of an eye. With security tokens, because it's a regulated asset, that those fears won't happen, because even if the investor lose their wallet, is the issuer's responsibility to burn those assets and issue new ones. Self-custody, though, for security tokens is still unclear in terms of regulation. We still don't know if self-custody will be possible for security tokens, but I can say that if that's possible, we can probably see a future where investors will own those assets and have the liberty to sell depending on obviously their investor profile and investor profile of the buyer of those tokens. You create so much liquidity if we live in a world where self-custody for security tokens will exist.
But just so I understand, like at present, right, you're saying self-custody doesn't exist. Mm-hmm. So again, like if a token comes into my wallet, it sounds like it's still not necessarily, fully on me to protect. Is that right? Like with a security token, there is a safety net, which is really wrapped through securities laws.
Yes. So if you hold a security token in a wallet, it is protected. We still work with partners that will help with custody of those assets. So right now, we can still provide all necessary requirements and safety net for investors to participate in those offerings, and they won't need to be worried about losing those assets and losing that wallet.
Cool. I'm gonna stay with you, Maya, if you don't mind. Could you just walk me through the process of purchasing a token through an STO as a Republic retail investor?
The process is very simple. If you are an investor that never touched cryptocurrencies, you probably will feel very seamless and you won't even feel the difference. Security tokens are still investment assets. So you will still go through all the process and necessary requirements to buy those assets. I would add that so the KYC process is the same. The compliance process is the same. All the information about that asset and legal requirements will still you still have access to all those informations. The thing with security tokens is that you will have access to a wallet, in the case of Republic Wallaby, where you can hold those assets and have access to them on the vesting schedules, lockup periods. Everything would be way easier for investors to get that information whenever they want.
Oh, that's cool. So it's really the same as receiving like a paper security. It's just kind of wrapped in the token to take advantage of blockchain technology.
Yes, it's a digital representation of that investment contract via tokens in a digital space. It's very easy to interact with that asset. It's very easy to understand. Depending on the platform that you choose, if it is Republic, you will see that it's a very clean dashboard, and you won't need to understand what is actually happening on the back end. You will just see that the transactions are faster, and it's way easier for you to buy that asset and understand what's going on behind it. Even if it is like a dividend distribution token, you will receive that money straight to your wallet, and it will be way faster for you to settle any payments or anything.
Very cool. And just to tack on one more on that thread, we're talking about crypto scams and all these things that are very, a lot of really smart people have fallen victim to these traps. So like my one question is, how do you ensure that you're not investing in a security token scam? Like what's the process for that?
It really depends on the platform that you're investing and choosing. Obviously, there are not many security token platforms in the space, which makes it a little bit easier. And the reason for that is that, like Matt mentioned, you still need to comply with all the regulatory framework to sell those securities. There's a lot of licenses in place that those platforms need to have in order to sell those assets. So there's not many of those in the market right now. And if you want to make sure that you're making a safe investment, or at least you're making a safe choice on what the platform you should do, you can always go to Republic. You can always access us. There is a lot of information on Google or any other place that you can find about security tokens. But I would say that there are still a few companies in the space that you can probably find information that will help you understand what asset you're buying, and specifically if they are complying with all the regulation in place.
That sounds pretty straightforward. Just don't go to the dark webs to purchase these things, right? They're very compliant, and only platforms like Republic and a couple others seem to be handling it. Let me pass it back to Matt as we get into some of the broader implications for the security token revolution, we might call it. So my question to you, Matt, is how do STOs fit into the larger narrative of democratizing finance?
I think when you take security tokens and the underlying tech, which is blockchain, and you look at what blockchain does and sort of its use case and its value, I think there's two main benefits. The first is one, it's a public ledger. So when you have a securities transaction, or you have an investment that happens, after that point, a company needs to keep a ledger, or what's often called a cap table or a capitalization table, to understand and know at any given time who owns what and what kind of investment in the company. So blockchain can be helpful in that it is a public, decentralized ledger that a company and other parties can refer to if there are questions or sometimes disputes about ownership and capitalization. The second aspect of blockchain that I think it works here is payments. So blockchain enables peer-to-peer payments, or payments between different parties in a cheap and efficient and fast way that's probably less prone to mistakes or fraud. Between the public ledger and the payments aspect of blockchain, the tokenization and is sort of the implementation of those two benefits to help make investing and raising money easier, more efficient, and cheaper. So blockchain and security tokens as the implementation of that blockchain tech, I think, are sort of the way that we're going to make the private markets more accessible and more liquid, and sort of drive that innovation in the future of finance.
Yeah, those are all really excellent points and a lot to dwell on. As I'm sort of, gestating and trying to let my imagination run a little bit more wild, can you think of any specific industries where STOs might be particularly beneficial or more prevalent?
I think real estate is probably the where we see the most inbound. So, in the 6 years that I've been doing this, there are so many projects that have come to us saying, "Hey, we're a real estate project, commercial, single family, other real estate asset classes," and they've said, we're super interested in tokenization and blockchain. What can we do here? It's also a difficult asset class because of the way that investment company and securities laws are written. But as we sort of push into this frontier, I think it probably represents the biggest opportunity for security tokens because one, everybody understands real estate and it's like a real world thing that you can represent on chain, but people can kind of understand it and conceptualize it pretty easily. And it's also just a huge asset class with tons of individual fund managers, sponsors, real estate developers, and other folks in the ecosystem that could benefit from this sort of fundraising and having a capital source outside of just perhaps like sort of the traditional or institutional LPs or investors that they typically raise from, or banks or other lenders.
Interesting. Now, I mean, just so help me understand, right? Because that still kind of puts us in the lens of very like traditional business hat on, right? But is it true that STOs could actually also kind of fit another niche? And I'm thinking like creative communities. Is there room for a musician to skip the label and go straight to the community? Is there room for a director to skip the studio, right? A lot of those traditional models where the value gets stuck in the center. Are those also things that are applicable to this STO process?
I do, and I think one of the biggest benefits of STOs is Republic. Typically, our minimum investment size is like $100, and that's really really low. And I think what's going to allow us to keep our investment minimums that low, and perhaps even go lower and expand globally, where in markets where $100 might even be too large of an entry point for some folks. Security tokens are important to maintaining that, or even to keeping those investment minimums low. And in industries or asset classes like you're talking about, so music royalties, upside in film rights or film development. We even on Republic ran an offering for basically a portfolio of wines, what kind of we broadly term like culture assets and culture offerings. I think security tokens are a really great example of that because there are these like broadly sort of accessible and exciting assets that people interact with every day, and blockchain and security tokens are going to enable low minimums and low entry points so that people can invest in a bunch of these things and have a portfolio of these culture assets. So I absolutely agree on that point.
So like you can cover it from a business, doing sort of pre-IPO shares. Sounds like real estate is a really good asset class, and then there's even some leeway to get more creative in what I don't know, commoditized businesses, right? Like a business around some asset that they've collected. I'm just trying to riff on a variety of ideas, but like there's no reason why a collective gaining a bunch of Pokemon cards couldn't issue a token that represents the value as they put in more effort to making that asset class gain value itself. Is that kind of accurate?
Yeah, like, whether it's Pokemon cards or other collectibles or assets that typically you can't fractionalize or sort of have broad upside in among a large group of people, I think there's totally opportunity there. I mean, how cool is it if you have you follow an artist or a band that you're really excited about, and you've sort of been with them from the beginning, and that you're able to sort of buy upside in their music library before a label picks them up or a major label picks them up, and you get to sort of economically benefit in the same way that the actual artist or the band does. I think that's actually a pretty cool story, and I think STOs and security tokens are enabling that kind of creative and dynamic engagement between creators and musicians and and artists and their fans or communities that love them.
I love it. I mean, it just seems like it unlocks a lot of new asset classes, but like creativity and the ways that we can go about financializing maybe some of the dreams that we have ourselves, right? And being inclusive. So very, very interesting. Thank you for that. Another question for you, Matt, just while we're sticking on kind of regulation and such, is do the global variations of regulations affect the adoption and success of SDs? Because we've seen the US has kind of been a little bit stuck in one spot, and then Hong Kong or China will jump ahead. We're seeing Singapore trying to make their own rules. The Emirates, I'm just curious how all of that really affects the adoption and the success of this asset class.
It's hard. Like it's hard because sometimes securities laws and other laws are at odds with each other in different jurisdictions. It's hard to, and especially when the licensing is country to country or region to region. To sell securities in the US, you need to be a broker dealer. But in Europe, it's a different license, or in the United Arab Emirates, it's a different license. So it's hard to kind of pick up this patchwork of licensure and securities and legal regimes and try to create something that encompasses and accommodates all of those. And in a way, I think the blockchain and security tokens from a payments and ledger perspective, to my earlier point, can actually help with that sort of standardization. I think there's some work to be done around almost like the interoperability across different jurisdictions and countries, so that to enable that. But I actually think we have pretty good frameworks for security tokens. I think it's the way in which securities laws interact with other laws like custody of securities or payments or cross-border payments, for example. The way that those laws interact with securities laws make it really difficult to implement security tokens. So the securities laws themselves are actually like fairly clear. It's just complying with them with this matrix of other laws and regulations, as well as applying those internationally and cross-border, can be really difficult. And we're hoping that regulation will continue to emerge and standards will continue to emerge in countries and regions to make that adoption and implementation easier.
Yeah, that's fascinating. There's no borders on the internet, right? So you guys have given me a lot of really interesting, well, just a broad download on security tokens. I mean, even some securities in general, just from my broad misunderstanding, if you will. But one of the cool things I think in this topic, and where Republic really stands out, is that Republic has been on its own journey in security tokens land for a very long time. And it's been deep and in depth and pretty high touch with the regulators. So I would just like to learn a little bit more, Matt, if you wouldn't mind, again, taking us down this path, holding our hands a little bit, and just unpacking the story of the Republic Note and Republic's own adventure into the world of STOs.
So Republic, as an investment platform, we have licenses and that allow us to sort of take upside in the companies that we work with. So we have what's called a Reg CF funding portal, and we get to take what's called a securities commission as part of every deal, which means that we have a very small interest in every company, or almost every company that raises through our funding portal through Reg CF. And then we have what's called carried interest, basically an upside interest in the companies that we invest in via Republic Capital. So if an investment that we make for our LPs in Republic Capital does really well and returns money, Republic gets to take a piece of those profits that are returned that are distributed to investors. So we have these upside interests in these companies that raise capital through Republic. What we wanted to do is give our larger community a chance to share in that upside of Republic's portfolio companies with us. And what we did was we structured an instrument, an investment contract that says, hey, you can invest with as little as $100 and get access to this portfolio, to this upside in this portfolio of Republic companies. And true to the Republic vision, we saw that tokenization was probably the best way to implement that. So we created what's called the Republic Note, which is a security token that accomplishes that goal of allowing our community to share in the upside of the Republic portfolio.
That's super interesting. And obviously, each security token has its own edge, right? They are not like a one size fits all kind of thing. Can you say there's anything specific that separates the Republic Note from other security tokens?
I think a lot of security tokens are the underlying asset is sort of like in its really beginning stages, or it's pretty future or forward looking. One of the cool things about the Republic security token, the Republic Note, is that we've been in business now at Republic for 7 years, and we have tons of companies that, if there is a return from them, there will be a portion of those returns that go to note holders. Like you can see on our website, and if you go to republic.com/note, you can actually kind of see the assets that are part of the note pool. So I think one of the cool things about Republic and the note is that existing portfolio of companies that are part of that pool.
Look, that's really cool to me. I think it's exemplar of everything we've discussed, right? A way to pull the community into the upside of what businesses are doing. And there's so many ways to do it. Another question, Matt, on a similar topic. Obviously, the security token space is rather new and novel. And I think the note is a really righteous idea with a lot of, I'm sure, technical capabilities that had to be developed and obviously took time and resources. So why did Republic decide to create its own digital security?
We really care about our community at Republic, and we have a community of over 3 million people who ostensibly want to invest in private assets. And it was important to us that we have those folks share in the upside with us. So at Republic, we're trying to build a generational company that changes and innovates the private market space, and the people that are along with us for the ride and making investments on the platform, we want them to benefit just as much as our institutional and venture investors do. And this was probably the best way for us to do that.
Very cool. Classic case of eating your own dog food, as they say in the tech world, which I think is the best proof of concept the builders actually will use what they're creating. A lot of information has been covered in this chat, this conversation. I think it's really, really interesting. And just to kind of put a little bow on it, Maya, I'm going to toss this your way. But my question to you is, in a nutshell, why should retail investors care about STOs in this current financial landscape?
I believe that the next generation of markets and securities will be tokenized securities. And currently, there's no operating system to facilitate the current financial market, and blockchain can unlock a full set of applications and possibilities to create efficiencies in these private markets. So, and the STOs, they sit in the backbone of this revolution. And that's why I think investors and everyone should care and get educated around the technology, because it really will disrupt financial markets.
Wonderful. So we've gotten a really big download on the STO space. So I just want to kind of, end this with one last question to each of our guest speakers here. Matt, if you wouldn't mind taking us through just what's one piece of advice that you'd give to someone who's considering investing in an STO for the first time?
We're not doing tokenization just for tokenization's sake. So when I hear that question of what are the particular things that I should be paying attention to with regard to a tokenized security, one of the benefits of security tokens is that there is sort of this regulatory framework and scrutiny that sort of protects you as an investor. And as long as the asset is sound, ideally that you have that layer of protection from a regulatory perspective. And people ask sort of what blockchain should I look at for security token investments? Should I look at Avalanche or Algorand or Polygon-based security tokens? And I think the answer is there isn't a clear winner yet. The underlying asset is what's more important.
Awesome answer. Maya, I'd love to get your takes as well.
We have to remember that STOs are early stage investments. So if you want to invest in an STO, be sure to get educated about what that asset really means. And you have to hold it. You're going to hold it for a long time. It is a long-term investment. make sure that you understand what you're reading. You do your own due diligence on what you're buying. If that asset is important to you, what does that represent? Because you're playing VC. You want to make sure that you are investing in something that you're not only passionate about, but you understand, and you're going to be a long-term partner of that company. So that would be my advice for everyone investing for the first time in an STO.
Thank you so much to both Matt and to Maya. That is officially a wrap for our very first episode of Web3 101. I want to give a huge thank you again to our incredible guests for sharing their wisdom and their insights on security token offerings. This is something that they touch every day, and it's truly a privilege to be able to pick their brains. So beyond that, it's been an enlightening conversation, and I hope that you, our fantastic listeners, have gained a ton of valuable knowledge. Remember to visit republic.com if you want to dive a little bit deeper into the note, all of the information that's there, as does most of the advancements that you'll see coming out, basically based off of what we've discussed in this conversation right now. Remember that the crypto landscape, it can seem complex. It honestly gets a little more complex every day. But we're here to break it down for you, to make it digestible, to keep it simple. Until next time, this is Graham Friedman, your friendly neighborhood crypto guide, signing off. So stay curious, stay informed, and stay excited about what the future holds in this amazing new era of the internet, finance, and commerce. Thanks for joining us, and as always, we'll catch you on the next episode.